Hey everyone, welcome back to Corporate Decoder, the place where we decode the secrets hidden in company filings. And our smirky joke today is that sometimes the most exciting thing in a filing is not what's inside, but the fact that they remembered to file it at all. Today we're diving into Real Messenger Corporation's latest filing to see if they're still sending the right message. Alright, so what we have here is actually an amended filing for Real Messenger Corporation. Think of it like a company sending in a report, then realizing they forgot to attach a crucial document or maybe spilled coffee on a page. So they send in a corrected version. This particular amendment is to add their clawback policy, which is like a company rule about taking back bonuses if something goes wrong. This clawback policy is Exhibit 97.1 and is essentially a safety net the company puts in place for a few key reasons. It addresses situations where executives might receive bonuses or incentives based on financial results, but then later it turns out those results were wrong or there was some misconduct. The policy allows the company to reclaim those incentives. For investors, it signals that the company is trying to align executive behavior with financial accuracy and good governance, which is a positive sign for accountability. Now, before we get into the nitty-gritty of what was amended, let's establish who Real Messenger Corporation is. They are incorporated in the Cayman Islands and their Class A ordinary shares and warrants to purchase Class A ordinary shares are traded on the Nasdaq Stock Market LLC. As of the end of March 2025, which is the period this annual report covers, Real Messenger had 4,821,000 ordinary shares and over 6.5 million warrants outstanding. This gives us a snapshot of their capital structure at that time. Now, according to this filing, Real Messenger is currently classified as a non-accelerated filer and an emerging growth company. This is important because it means they have a bit more flexibility with certain reporting requirements compared to larger, more established companies. They've also elected to use US GAAP for their financial statements. So as mentioned, this filing is an amendment to their original report. The company clarifies that this amendment is purely to include that previously mentioned clawback policy. They're not updating any other part of the original filing, nor are they reporting on any new events that happened after the original filing date. It's a focused update on adding a governance document. And here it is listed in the exhibit section, Exhibit 97.1, the clawback policy. This is the sole purpose of this amended filing. The report is signed by Kwai Hoi Ma, who holds the important titles of Chief Executive Officer and Chairman of the Board of Directors. This signature confirms the accuracy of the filing as per their knowledge. Now let's talk about what this filing doesn't really give us. Since this is an amendment to add an exhibit, it doesn't contain new financial tables or detailed operational updates. The core financials and operational story of Real Messenger Corporation for the fiscal year ended March 31, 2025 would have been in the original Form 20F filed back in July 2025. This amendment is purely a procedural addition from a legal and governance perspective. However, we can still infer some things. The fact that they are filing an amended report to include a clawback policy is a sign of good corporate hygiene. Many companies are adopting these policies to comply with new regulations and to demonstrate commitment to sound financial management and executive accountability. It can help protect shareholder value by ensuring that incentives are not paid out in situations where the underlying performance is later found to be flawed or fraudulent. For investors, this focus on the clawback policy is a signal that Real Messenger is paying attention to the finer points of corporate governance. While it doesn't tell us about their revenue growth or profitability directly in this document, it does suggest a proactive approach to risk management concerning executive compensation. It's a piece of the puzzle that contributes to the overall picture of how the company is managing itself. Looking at the other listed exhibits, we see a lot of references to a merger agreement and its various amendments. This indicates that Real Messenger has likely been involved in significant M&A activity or restructuring, for instance. There are amendments dated throughout 2023 and 2024 pointing to ongoing or relate to a merger agreement, showing a pattern of deal making. We also see standard certifications like the CEO and CFO certifications under Section 302 and 906 of the Sarbanes-Oxley Act. These are requirements for public companies to ensure the accuracy and integrity of their financial reporting. The presence of these certifications, along with the filing of this amended report, suggests the company is actively engaging with its disclosure obligations. So, to wrap up our look at this specific amendment, Real Messenger Corporation is filing this document primarily to add their clawback policy, an important governance document for executive compensation. While this filing doesn't provide new financial performance data, it does highlight the company's attention to regulatory compliance and executive accountability. The broader context suggested by the multiple merger agreement exhibits points towards a company potentially in a phase of significant strategic maneuvering or growth through acquisition. Now, looking at these numbers broadly and inferring from the fact they are filing these reports and have listed securities on Nasdaq, Real Messenger appears to be a company actively participating in the public markets and engaging with regulatory requirements. The inclusion of a clawback policy, while procedural, is a positive step towards stronger governance. The extensive merger agreement filings suggest a company that might be consolidating, expanding, or undergoing significant structural changes which could present both opportunities and risks for investors. Without the actual financial tables from the original filing, it's hard to give a definitive analysis of their financial health, but this amendment tells us they are diligently tending to the necessary paperwork that underpins their public status. What's your take on the importance of clawback policies for executive compensation and corporate governance? Let us know in the comments below. If you found this breakdown helpful, please give this video a thumbs up and subscribe to Corporate Decoder for more in-depth analyses of corporate filings. Also, don't forget to join our Discord community linked in the description to continue the conversation and share your insights. Thanks for watching, and we'll see you in the next decoding.